Good morning, everybody. Happy Friday. It's February 21st, 5:27 a.m. Central Time. Matt Bennett is here. Guys, let's start off with a possible trade deal.
So, according to President Trump, despite growing tensions, a new trade agreement between the U.S. and China may be possible. Trump did not provide specific details about the potential agreement. Earlier this month, Trump announced a 10% tariff on Chinese imports. In response, China implemented a 15% tariff on U.S. coal and liquefied natural gas, as well as a 10% tariff on U.S. crude oil, agricultural machinery, and vehicles. During his first term, Trump negotiated the Phase 1 trade deal with the intention of substantially increasing U.S. agricultural exports to China. However, as we can all remember, China failed to meet its commitments under the deal.
I believe that at one point yesterday, it would have been Wednesday night into Thursday. I think the market was bid up. Some of the grain markets were bid up on this for just a moment in time. Is this something to get excited about, Matt, or is this just a comment that maybe was taken too far?
I don't know if I would get too excited about it. I guess my opinion on it, Joe, after you've seen kind of some of his, I guess, threats and some of the actions people have taken, whether it's Colombia, whether it's Mexico, I feel like the trade's been a little skeptical that all of the tariffs would take place. As far as implementation are concerned, they know that it's been kind of a negotiating tactic. But in my opinion, if you say, hey, we've got a trade deal put in place, to me, it's definitely going to be a positive. I mean, it'd be hard to look at it otherwise. It's just, I think people have been somewhat skeptical to date. That's just my opinion, though.
I think when you consider all the fear that was out there prior to the inauguration about trade wars and what's going to happen to the grain markets, what's happened so far, 5 weeks in, has been a pleasant surprise. The markets have acted well.
They haven't seemed fearful.
No. Well, we haven't had any sort of retaliation comment from Mexico or from China, and not as it relates to corn, soybeans, wheat, whatever.
Yeah, I'm just saying that, like, since the election, it's been interesting, but inflationary play, call it what you want. But by all means, when we were going into that conference in Nashville, Joe, you and I talked about it, and people were buying up going into the end of the month when they knew that tariffs were supposedly going to be talked about Feb 1. So it's crazy. The big money just has seemed to play chicken with the tariff game a little bit, in my opinion.
We know that there's been a lot of farmer selling of corn in particular the last couple of months. Do you think any of that selling had to do with tariff fears?
I'm sure it did. Yeah, there's no doubt. I mean, well, Joe, I think that we as growers, I know I've done this before. I'll just be totally honest with you, have made sales based on a fear of something. Of course, fear of going lower,
Yeah.
And so I've done it. I've been there. I try over the years, I guess, to combat that, and talk to my growers about it. But there's no doubt whenever someone says, hey, we're going to have tariffs put in place, it gives you that panic, that pit in your stomach that, hey, I'm going to come in here next Monday and we're going to be down 20 cents, And so in my opinion, there was definitely bushels sold worried about tariffs.
Yeah, fear and greed can drive a lot of decisions and oftentimes a lot of bad decisions. I have a couple charts here related to this. So U.S. soybean export sales to China this year are not stellar by any stretch of the imagination. We're below average, I would say, barring those trade war years, which were the only 2 years that were worse than what we've got going on this year. China has bought essentially nothing in terms of corn out of the United States for this current marketing year, which is actually kind of impressive. We've got, I think, the second best export book of the last 10 years, despite the fact that China has been totally absent. So I don't know. Could they come in and buy corn amid a trade deal? I'm not going to say it's impossible.
I mean, we've heard whispers here and there that they were going to start buying corn, right? And it kind of got a few people, I guess, in the underground, if you will, a little bit excited. But yeah, I think they could come in and buy corn. I mean, the thing is that, China will say, hey, we've got enough corn for the time being. And then typically they turn around on the backside of that and buy a bunch of corn. It's like they want to maybe ease prices just a little bit before they step in whole hog. But they build stocks at times, and so if you do get into a trade war deal, in my opinion, yeah, you could see them come in and buy corn. I really got to hope that we get some sort of trade deal put in place to get them to actually buy some of our commodities, because it'd be supportive. I mean, we need it. I mean, we continue to lose world export share on corn and beans over the course of the years. And I don't think that's going to change without someone like China hopefully being a customer that we haven't seen here the last year or so.
I noticed on my chart here, my months are missing. I apologize, guys. I threw this together early this morning. Let's go on to some corn market price action.
The nearby March 25 corn contract hovers near $5 per bushel ahead of today's option expiration. Oftentimes, futures markets will gravitate toward big round numbers ahead of option expiration. Today may be no exception, as there is a significant amount of open interest at the $5 strike price. In additional corn market news, the nearby March 25 through May 25 spread traded near record wide levels on Thursday, bottoming near 15 cents.
Let's go back to the March corn chart for a second. So there's about 21,000 contracts of open interest at the $5 and $5 calls that expired today, about 7,000 in puts. And a lot of times when there's open interest like that, which is just slightly more substantial than what you see at other nearby strike prices, you'll just see March corn settle like right around $5.
Yeah, I mean that would be
100
my
times.
that would be my expectation for sure. And going back to that spread, it's been
Okay, let's
pretty,
go to the spread because the spreads are
yeah,
more interesting. Let's go to that. So you've got essentially a record level of carry from March to May, but then we'll talk about this all in one conversation. You look at May to July, and you've only got 4 cents of carry there,
exactly,
which
yeah.
could be a hell of a lot wider. So what does all of this tell you?
Well, so if I look at, for instance, go over to like cash bids, Joe, and basically, a lot of these guys are saying, "Look, we can't take any more corn right now. If you want to bring it, sure, you can bring it at option price, and if you want to bring it here in 20 days, you can get 10 over." So basically, a lot of these end users have got their belly full right now, and they've got great coverage. And so, I think that this is a big function of what this carry is, just simply from March to May. I mean, you see bids from March to, even April in our part of the world. One particular bid for soybeans was 25 cents and corn was 15 cents from March to April. It's just crazy. And so they're definitely trying to hold people off. I mean, whereas we saw that bull spreading last fall, we've seen complete opposite here lately. And it's because so much corn's moved.
So, conventional wisdom would tell you if the nearby spreads are weak, that's a bearish indicator. I kind of read it the same way you do. I know that farmers have sold a ton of corn. I know that the end users covered for, call it 60 days. And then maybe when you get into this window, this like May to July window, there's not as much coverage. I don't know if it has to, maybe I'm overthinking it, but I don't know if that March May spread has to be read as being a bearish indicator.
No, I don't think so. I really don't either. I think that it's just a function of the fact that there's been a massive amount of corn sold. I mean, there was a ton of corn sold going into the January report.
Yeah.
And then you've done nothing but rally since then. So every strike price, 470, 480, 490, and now $5. There was some selling going on this week for sure. Just talking to some of the end users we know, and it might not have necessarily been on the cash. Some of these guys saw $5 on the board and said they'd sell some April corn. So absolutely, there's been selling all the way through here.
I believe corn basis has firmed just slightly in some areas of the country over the last, call it 6 or 7 days. But I know a lot of people have old crop basis questions because old crop basis in general is not good. Do you see any sort of seasonal improvement, during planting as we often see?
Yeah, I think that you'll get something. I mean, the thing is, of course, you've got, as you get into planning, you've got the all important March 31st acreage report, which could, you could see basis really improve, but it could be a function of market going lower as well, Joe. So, I think that there's a couple of things that come to mind. If someone's sitting here looking at substantially higher prices, but they say, "Oh, my basis sucks," I get it. But the true crash price is probably $1 over what it was the harvest low last year.
Right.
So I don't know. If you're getting antsy about it, sell some corn. I mean, I have no issue with that, even if basis isn't great. I do think basis does improve, though, all things equal. Even if the acreage report isn't wildly bearish, and you keep corn status quo, some places are going to run out of coverage. But from what we've heard, there's some outfits that have coverage clear out almost to summer. And so it just depends on where you're at and who you're dealing with.
Right. All right, we got some fertilizer news.
Nutrien is concerned that tariffs on Canadian imports will increase costs for U.S. farmers. The Canadian Fertilizer Company believes farmers will bear the burden of both the tariff costs and its overall impact. The company stated on Thursday that farmers will feel the impact of President Trump's proposed 25% tariff on Canadian imports after the upcoming spring planting season. U.S. farmers are still expected to have access to fertilizer this season. The U.S. imports more than 80% of its potash supply from Canada, and according to the University of Illinois, the tariff could cause potash sourced from Canada to increase by more than $100 a ton.
How concerned should farmers be about this?
Potash has been the only thing, Joe, in the last several months that you could say from a fertilizer standpoint that's actually cheap. I mean, relatively cheap compared. If you look at phosphate, man, it's just been super expensive. It's been hard to get it here. Transportation costs have been high. Of course, nitrogen sources have been expensive. So it is concerning to me. I mean, in a time whenever we all know that you whittle down commodity prices over the last couple of years, input prices stayed elevated. If you keep the one thing in fertilizer that was actually cheap, expensive, or get it expensive again, I'd be a little bit concerned about it. But hopefully, once again, cooler heads will prevail in some way here. I mean, the other thing is that ethanol buys a ton of ethanol off of us. And so it'll be very interesting if we get into a spat, if they quit buying ethanol and we get more expensive potash. I think that could be a double whammy on the U.S. farmer.
Yeah, we don't need to go. We hope that doesn't happen.
The USDA will release the first portion of funds that were previously frozen due to President Trump's executive order. The agency will release roughly $20 million in funding for approved contracts. The contracts pertain to the Environmental Quality Incentive Program, the Conservation Stewardship Program, and the Agricultural Conservation Easement Program. The funds were put on hold as part of a review of Inflation Reduction Act funding. As the USDA continues to review the IRA's funding, it expects to release more funds.
Okay, this is not the direct payments that we know are coming, but I wanted to throw it in just to kind of clarify. So the direct payments, the $10 billion in particular, that was signed into law. It's not frozen. So what's going to happen is the law stated that the government has 90 days from December 21st, which is when that bill was signed, to issue payment. So you're going to see something from USDA about the direct payments shortly, and they're going to be due within a month, essentially. This is something separate, and they're unfreezing a much smaller amount of money, $20 million, not $20 billion with the B. But I guess it's maybe something, I don't know.
Yeah, I don't know. I think Secretary Rollins, of course, has got a lot of pressure on her. Probably everyone, she went to top producer. She's been out and about, and that every ag reporter that she's talked to has asked her, "Hey, when's this direct payment coming?" Because a lot of the places I've been here recently, people have asked me. I'm like, heck, I don't know. I just know it was signed into law, so it has to be delivered. It was part of the law that was passed, and so. Yeah, I mean, I don't want to say has to, because Joe, you and I know when it comes to politics, anything can happen, but that is what's supposed to happen. And so, she's been asked about it, and I think they were looking for an olive branch here, and they found, some low hanging fruit where they could latch on, because when it comes to government, $20 million doesn't amount to a whole lot.
As I understand it, the direct payments are coming. It's going to be by third week in March, and it would be a terribly awful look for Trump to
for sure.
do anything to get in the way of that at this point in time.
Gold prices soared to a new high on Thursday. Spot gold surged to a record high of $2,954.69 per ounce, marking its 10th record high this year. The surge in prices has been driven by concerns that President Trump's proposed tariffs may cause a global trade war. Earlier this week, Trump said he would announce tariffs on cars, lumber, semiconductors, and pharmaceuticals over the next month or possibly sooner. With strong fundamentals, some analysts believe gold has the potential to surpass the $3,000 mark. However, the potential for a Russia-Ukraine peace deal could cap further price gains.
I don't know if I buy the tariff story. Gold's up because of tariffs. I mean, maybe that's why you buy for a day or two. But I mean, this trend is indicative of something bigger. I don't know if it's inflation fears. I don't know what. Maybe the gold's not at Fort Knox. I don't know what it is. It looks awfully good though.
Yeah, I mean, that's A lot of people have said that all that gold is not at Fort Knox, Joe. So
Hey,
I don't know. You should take a drive and see if you can find out today.
well, I saw Trump was on Air Force One talking about the other day, and he acted as if he knew something.
Yeah.
Like he's like, people say the gold's not at Fort Knox, wink, wink, and I don't know if he knows anything or not, but
Yeah, I don't know if he does either, but yeah, I inflationary play, I think to a degree, but I don't know. I mean, there's even been people that throw out there that Trump was proposing maybe going back to a gold-backed currency. I don't know if that's something that's even a possibility. I just know that people have thrown that out there, but certainly there's a lot of interest in owning gold. So I don't know. To be honest, I can't explain it.
I think there's some inflation fears out there. I do. These inflation prints are still running too hot. They're not where they need to be. And I think that's at least part of it. You know what gold does over time? It goes higher. That's what it does. It's just over the course of decades, not every month or every day, but over the course of decades, it tends to move higher.
We had a new drought monitor map come out yesterday. Temperatures across the Corn Belt were below average last week, while most of the area received some measure of precipitation. Drought conditions improved in Ohio, Indiana, and Illinois. Slight improvements were also noted in southwest Iowa, northwest Missouri, and southeast Nebraska. The majority of the high plains saw temperatures well below normal last week with minimal precipitation. Drought conditions were mostly unchanged, with the exception of a slight improvement in northeast Kansas. When we look at the percentage of U.S. areas experiencing drought, corn country 45%, soybeans 36%, winter wheat 20%, spring wheat 40%, and cattle country 34%.
Not only is it dry in the Western Corn Belt in particular, there's no rain of any material substance in the forecast, really, even out through the 16-day period. I'm told, Matt, that the big corn acreage expansion is going to be a Western Corn Belt thing largely. I think it'll expand in the East too, but more so in the West. Are guys concerned about this? Should they be concerned about this?
I mean, I think you're always concerned going into the growing season without subsoil moisture. Talking to, like, for instance, Snodgrass, he's always told me a wet spring can cure a lot of woes pretty quickly. But at the same time, going in with no subsoil moisture, it's like 1 2 inch rain isn't going to get you there. I mean, you need a 2 inch rain that can soak in, and then another 2 inch and another 2 inch rain. And that's not what you want during the springtime. We all know that. We'd rather have a dry spring. So, yes, there's a lot of concern. I'd say anywhere that I've gotten west, that's exactly what people have told me, is that they're excessively dry, as dry as what they've been in years at this time. And so, I know they had a drought 2 years ago, so that's saying quite a bit. I agree the expansion is probably going to be more in the west, but I also believe the farther north you go, the corn on corn acres are probably going to pick up quite a bit.
Yeah, for sure. Yeah, not much in the forecast here, even through the extended period. Only place in the country it's going to be wet is like the southeast, and then the northeast, and maybe the Pacific Northwest, and that's about it over the next couple of weeks.
U.S. ethanol production was strong last week. Weekly output of 1.1 million barrels per day was up marginally on the week and unchanged versus the same week last year. Ethanol stocks were pegged at 26.2 million barrels. The print was up 2% compared to the previous week and up 2.8% compared to the same week last year. Implied gasoline demand was down 3.9% week over week, but up slightly versus the same week last year. On average, over the last 4 weeks, implied U.S. gasoline demand is up marginally compared to the same period last year.
Looking at spot ethanol margins, when you look at spot prices of corn, DDGs, inputs, ethanol, all that stuff, they're negative. I mean, they're negative as bad as 30-40 cents a gallon in some areas, but the processor got a lot of corn bought perhaps at lower levels. I don't know.
Oh, there's no doubt. I mean, historically, your ethanol plants have been great at locking in margins way out in advance. And there's no doubt that they probably bought a ton of corn before the calendar even turned, to be honest with you. So, I've got to think that most of those margins are locked in for the time being, but I'm with you. Spot margins don't look good at all. So, I think once you run out of some of that, you could take the shine off this ethanol grind just a little bit. Yes, it's run along really good, but I'm not so sure that we'll be able to stay there.
Yeah, ethanol has been absolutely a bright spot with regard to corn demand. Cattle were lower yesterday.
They were. Live cattle were 20 cents to 97 cents lower. Feeders saw losses ranging from 22 cents to $2.22, with the exception of the November contract that gained 7 cents. We do have a cattle on feed report coming out here this afternoon. Cattle on feed as of February 1st are estimated at 99.2% of year-ago levels. Placements in January are forecast to be 102.2% compared to last year, and marketings last month are expected to come in at 102.1% versus last year.
You have predictions for the report, Matt?
No, I don't. I think that it'll be friendly, but it'll be expected to be somewhat friendly, is what I think. I mean, overall, I think this cattle deal, it just got plenty hot, and I think people, in an orderly fashion, have taken some of the longs off the table, and so be interested to see if hopefully we don't gap lower or do anything like that moving forward. But I don't know. I think it's a long-term bullish situation. It's just that I wanted to take a little profit.
Outside markets are mixed this morning, pretty quiet, guys. Everybody have a wonderful weekend. Matt, thanks for joining us. We'll be back on Monday.